APM Aptorum Group Limited Technical Analysis. General Overview and Trend. Aptorum Group Limited has experienced extreme volatility over the past 3 months, characterized by 2 massive speculative spikes followed by sharp corrections. The stock began June around 1.11 and exploded to a peak of 4.42 in mid-July on unprecedented volume, then collapsed to a low 1.00 by early August. A second spike to 4.47 occurred in late August, again accompanied by extraordinary volume, before the stock resumed its decline to close at 1.85 on September 4th. This pattern indicates highly speculative trading with minimal fundamental support. The current price action shows a clear downtrend since the late August peak, with lower highs and lower lows forming. The stock demonstrates exceptional volatility typical of low-float, speculative biotech companies, with price movements driven primarily by news flow and trader sentiment rather than sustained institutional accumulation. Price and volume. Volume patterns reveal the speculative nature of trading in APM. The July 16th spike saw 196.4 million shares traded as the stock surged to 4.42, while the August 21st spike featured 397.8 million shares traded during the run to 4.47. These volumes dwarf the stock's average trading activity and indicate frenzied trading during spikes. The September 4th close at 1.85 occurred on moderate volume of 335,777 shares, significantly lower than spike levels, but still elevated compared to pre-spike periods. The on-balance volume indicator at 687.6 million reflects the massive volume during spikes, but shows recent distribution. Price-volume relationships confirm weakness during declines, with the stock falling on relatively high volume after spikes and recovering on diminishing volume. The Stochastic Oscillator at 41.0 million shows some positive divergence recently, but this appears insufficient to reverse the broader downtrend. Moving averages EMA and SMA. The current price of 1.85 trades below most key moving averages, confirming the short-term downtrend. Short-term averages show bearish alignment. The 5-day SMA at 1.92 and EMA at 1.92 both sit above the current price. Medium-term indicators reinforce this weakness, with the 10-day SMA at 2.36 and EMA at 1.99 well above current levels. The 20-day SMA at 1.86 and EMA at 1.91 are also above the current price. Longer-term averages provide perspective. The 50-day SMA at 1.53 and EMA at 1.63 are below current levels, indicating the stock remains above longer-term averages despite recent declines. The 200-day SMA at 113 and EMA at 115 highlight the stock's dramatic rise from depressed levels earlier in the year. The price position below most short and medium-term moving averages confirms the recent downtrend, while remaining above longer-term averages suggests the overall structure remains positive on a broader timeframe. Technical indicators. Momentum indicators present a mixed picture with bearish short-term leanings. RSI 14 at 50.26 indicates neutral territory, but with recent downward momentum. Williams %R at -81.62 confirms oversold conditions, suggesting potential for a bounce. MACD shows weak positive momentum at 0.14, trading below its signal line at 0.20, with a negative histogram of -0.05, indicating weakening momentum. Stochastic oscillators reflect oversold conditions, with Stoch K15 at 20.86 and Stoch D15 at 28.20. The Money Flow Index at 96.91 shows extreme overbought conditions despite the price decline, indicating divergence. Trend indicators reveal conflicting signals. ADX at 51.81 indicates a strong trend, while Aptorum Oscillator at 7.14 shows slight bullish bias, Aptorum up at 64 versus Aptorum down at 28. the parabolic SAR at 4.47 sits significantly above price, reinforcing the bearish structure. Volatility measures show Bollinger bands at extreme width, with the upper band at 3.26 and lower band at 0.46, reflecting the stock's exceptional volatility. Linear regression. While explicit regression values aren't provided, the price trajectory clearly shows a volatile pattern with two major spikes and corrections. The linear regression line would likely show a moderate positive slope over the 3-month period due to the massive spikes, but with significant deviation above and below the line. The recent price action since the August spike shows a clear negative linear regression slope, confirming the downtrend. The stock's tendency to spike and collapse creates significant deviation from any linear trend, making traditional regression analysis less meaningful than for more stable stocks. The regression channel would be extremely wide, reflecting the stock's exceptional volatility. Next trading day opening prediction. Given the current price of 1.85 and mixed technical signals, the next session will likely open near current levels, potentially between 1.80 and 1.90. The oversold Williams %R and stochastic indicators suggest potential for a bounce, while the weakening MACD momentum and bearish moving average alignment indicate limited upside. The overnight future sentiment and broader market direction will be crucial, but the technical structure favors a flat opening. A gap down toward 1.70 is possible if negative sentiment prevails, while a gap up above 1.95 seems unlikely without significant positive catalysts. The stock's history of volatility makes gap openings more probable than for more stable securities. Resistance and support analysis and intraday movement. Current price at 1.85 faces immediate resistance at the 5-day SMA of 1.92, followed by the 10-day EMA at 1.99 and the 20-day SMA at 1.86. Psychological resistance at 2.00 provides additional overhead. Support levels are closer, with the September 3rd low of 1.71 serving as immediate support, followed by the August 29 low of 1.97 and the Bollinger band lower at 0.46, though this is too distant to be relevant. The price's position near support suggests potential for intraday bounces, but the overall bearish alignment of indicators favors range-bound movement with downward bias. Intraday movements will likely feature early weakness testing support levels, followed by volatile swings as traders react to price levels. The extremely wide Bollinger bands indicate high volatility potential, with possible swings between 1.60 and 2.10 within the session. Intraday high and low estimates based on ATR-14. With ATR-14 at 0.39, the expected intraday range spans approximately 0.78 points. Calculating from the 1.85 close, potential highs reach 2.24. 1.85 plus 0.39, while possible lows extend to 1.46, 1.85 minus 0.39. However, given the stock's history of extreme volatility, the actual range could significantly exceed this projection. The recent pattern of sharp movements suggests potential for even wider ranges, with spikes to 2.20 or drops to 1.50 within the session. Traders should anticipate highly volatile intraday action, with potential for rapid price swings in either direction, making the HER projection a conservative estimate rather than a limit. Possible scenarios. The short-term bounce scenario appears possible given oversold indicators, with the stock potentially rebounding to 2.0 to 2.20 if buying interest emerges. This could be fueled by short covering or speculative trading. The bearish continuation scenario seems more probable, with the stock breaking below 1.70 support and declining toward 1.50 or lower, supported by the weak technical structure and post-spike pattern. The consolidation scenario could unfold near current levels, with prices oscillating between 1.70 and 2.0 as the market digests recent volatility. However, given the stock's history, sustained consolidation seems less likely than continued volatility. The most probable path involves continued high volatility with downward bias, reflecting the speculative nature of trading and the lack of fundamental support at current levels. Conclusion: Aptorum Group Limited demonstrates exceptionally high volatility with a bearish short-term bias following recent speculative spikes. The price position below key moving averages, weakening momentum indicators, and post-spike distribution patterns create a cautious technical picture. While oversold conditions suggest potential for short-term bounces, the overall technical structure favors further downside or continued volatile trading. Investors should monitor the 1.70 support level closely, as a breakdown could accelerate losses toward 1.50. Risk management remains essential given the stock's extreme volatility, with the 2.00 resistance level serving as a critical pivot point. The technical evidence suggests the stock remains in a speculative downtrend phase, and APM appears vulnerable to further weakness unless significant positive catalysts emerge. The convergence of weak momentum indicators and extreme volatility warrants extreme caution for all trading positions.